Hello everyone, and welcome to today's educational webinar on holding physical precious metals within your IRA. My name is Ryan Griffiths, and I will be hosting today's presentation. Hopefully I'm coming over loud and clear. This will be recorded, and a link will be emailed to you with this recording so you can watch it later or forward it to whoever you see fit. Just a little bit about myself before we start. I am currently the Director of Operations for the Entrust Group. I originally started working with Entrust 9 years ago as the operations manager for one of our affiliate offices in Southwest Florida. In 2006, I took a management position with our corporate office here in Northern Nevada. And then last year, when the decision was made to centralize all backroom operations, I jumped at the opportunity to oversee our new precious metal service center. In the last 3 years, Entrust has seen a huge increase in IRA precious metal purchases, and we knew that in order to efficiently process these transactions and to meet our same-day funding policy, we were going to need a dedicated center that focused solely on these type of investments. So that's what we have created. The demand that prompted the Precious Metal Service Center and the demand that is what we are here today to discuss. What we'll do, obviously, as I flip screens here for you. There we go. Our goal today is to go over the process of holding physical precious metals within your IRA. Let's see why this is not moving properly here. There we go. As I said, our goal today is to go over the process of holding physical precious metals within an IRA. We're not referring to holding ETFs or mutual funds. We're actually talking about holding physical coins or bars within your IRA. So first we'll touch on the IRS regulations of the type of metals that can be held in these type of accounts. Then we will discuss the three parties involved. I always tell clients when we're talking about physical precious metals, there are three parties that are involved, and we'll go over those three parties and the role that each of them play. We will also go over in detail the steps of setting up a new IRA with the purpose of holding precious metals and the overall purchase process of actually placing an order and delivery of those coins or bars. And then we'll spend a few minutes going over the potential benefits of diversifying with physical metal. In the past, historically, what the purpose of hedging or diversifying with the gold or silver is meant to do or accomplish. I will say that as we go through this presentation, you are welcome to type any questions you have in the box on your screen. After each of these 4 segments, I'll take a few minutes to review those questions and go over them. If I see a question that I know will be addressed later in the presentation, I will skip it. So please don't think that I'm ignoring you. I just know that it will be addressed later in the presentation. Before we start, I will put up this disclaimer to let you know that what we're referring to today is strictly for educational purposes. Entrust does not sell or promote any specific product. We're not here to provide any type of legal or financial advice. We're simply here to educate clients and investors on what they can or cannot do within their IRA and provide education as to the method of holding these different types of assets. Just a little bit about Entrust. Entrust has been in business for over 30 years. We do have regional offices throughout the country. We currently have close to 15,000 clients with nearly $2 billion in assets under management. One of the main differences that Entrust has, and I think from a competitive advantage standpoint, is that we focus primarily on educating our clients and the general public on what can or cannot be done. We have a very knowledgeable staff that are certified if eligible. We do have local offices throughout the country that can provide live presentations or continuing education programs. So we've always prided ourselves on educating the general public on what they can do with their retirement plan outside of stocks, bonds, or mutual funds. There are a wide scope of investment options that are available to IRAs, including real property, precious metals, private stock, and even notes or mortgages. So we do our best to educate clients on what those products are and how to go about holding them. And having our local offices throughout the country gives us that competitive advantage of being able to put on regional presentations and continuing education programs to attorneys, CPAs, and real estate professionals. So let's get started on our topic today. We will be obviously talking about holding physical metal within an IRA. When it comes to the IRS, as you probably know, they're very good at explaining what you cannot do. They very rarely actually outline what you can do, as opposed to just stating, here's what is disallowed. Same goes with IRAs. In Code 408, they clearly state which assets are not allowed to be held in IRAs. One of those asset classes is referred to as collectibles. Within collectibles, they specifically mention coins and metal. So there is the assumption that IRAs cannot hold physical metal because it is viewed as a collectible and has collectible value. But what the IRS has done is they have made exceptions to their own rule. The exception to coins or metal is that any coin which meets the requirements in Section 5112, which refers to gold, silver, and platinum coins that meet a certain requirement, and if you read the code, what they're referring to are American Eagles. So when the IRA code came out back in the late 1970s, American Eagle coins were always allowed to be held because they are listed as an exemption to collectible coins. So American Eagles, gold, silver, and platinum have always been allowed within IRAs. But then came the Tax Act of 1997, which really opened up the door for physical metal. Because in the Tax Act, the Taxpayer Relief Act of 1997, they added more exemptions. Those exemptions included, obviously, the American Eagles that were previously listed, but they also exempted bullion bars that met the fineness requirement. We'll go over that on the next slide, what those requirements are. But basically what the code says is that any gold, silver, platinum, or palladium bullion bar that meets the fineness requirements and that is minted or refined by a COMEX or NYMEX approved refinery, which meets the Commodity Exchange Act, can be held in IRAs. But you'll see in the last statement, if such bullion is in the physical possession of a trustee described under Section A. Section A refers to custodians of IRAs. So in order for your IRA to hold physical bullion, it must be held under direct custodial control. That's where it comes into play that it has to be stored either by the custodian or a regulated depository, bank-like depository that the custodian uses. You could not take possession of these coins. In theory you could, of course. You can always take possession of your coins or bars, but it would be viewed as a distribution, a taxable distribution at that point. So owning physical bars or coins within an IRA is allowed as long as it meets one of these exceptions and that it's stored under direct custodial control. The Taxpayer Relief Act of 1997, what it refers to and what it's talking about is bullion. It's stating that an IRA can hold physical metal as long as there's no collectible value built into that coin or bar. So basically what they're stating is that any pure gold bar, silver, platinum, or palladium bar that meets these fineness requirements that you see on your screen right now would be allowable within an IRA. Now obviously there's certain types of coins that are minted by regulated government bodies that also meet these fineness requirements. For example, American Eagles, American Buffaloes, Australian Kangaroos and Nuggets, Austrian Philharmonics, and Canadian Maple Leafs are some of the more popular ones because even though they're in coin form, they're basically worth 1 ounce of gold, silver, platinum, or palladium. They're basically viewed as their melt value as if it were just 1 ounce bar of gold. It's the same as a 1 ounce Canadian Maple Leaf. You can also see that there's more description below about bars and rounds that are produced by a NYMEX, COMEX, or a certain refinery or government mint. What that really is stating is that when you place an order, especially with an IRA, through a dealer of your choice, and those metals are shipped to the custodian or to the depository for safekeeping, you don't really ever see those coins until you go to take possession of them. So what we rely on in the industry is that you buy a bar that is minted by an approved refinery. What that's doing is basically confirming that the bar you're buying is meeting that fineness requirement, therefore it's allowed within an IRA. If you buy from a mint that is not recognized on the Chicago Board Exchange, meaning that it can be sold on the COMEX exchange, there's really no way, unless you drill a hole in it, to verify that it's pure gold or silver. So because depositories and custodians and even clients that buy it personally, it's very difficult to know if a bar is real unless you're buying it from a regulated institution, refinery that has strict regulations as the type of bars that they're allowed to mint. So that's where the NYMEX and COMEX comes into play. So that's kind of the outline of the different types of products per the IRS that can be held. What I'm doing is just flipping through the questions right now to see if there's any questions that come up about the type of coins or bars that can be held. So if you have any questions about this specific type of topic, feel free to send over a question. I'm looking right now. The question came over, do coins have to be held under direct custodial control? As previously stated, yes, they do. According to the Taxpayer Act of 1997, in order for it to qualify as an IRA investment, the asset must be stored under direct custodial control. We have noticed or heard that certain institutions or custodians are allowing single-member LLCs where the IRA can buy the coins, or excuse me, the IRA buys the LLC, basically becomes the sole owner. Then the IRA holder manages that entity. But the IRS has already come out with a private letter ruling that states that LLCs are viewed as pass-through entities. So if the LLC is managed, is owned, majority owned by your IRA, it too becomes a disqualified person. So the IRS will view that entity as it would view you, as yourself, because the IRA owns the majority of that company. Therefore, if that LLC were to go out and buy coins or bars, then you store it in your home, the IRS is going to view that as you personally owning it and storing it. That would be viewed as a taxable distribution at that point. So you're always better off working through the IRS code and doing as they say, and in this case, storing with the IRA custodian. It's no different than any other IRA asset. If you were to buy a piece of real property or if you were to buy mutual funds through Charles Schwab, the custodian of that IRA is responsible for housing that asset and is responsible for providing reporting to you and to the IRS on an annual basis. Just flipping through here. A couple questions came over about the different types of coins. Peso gold coins or Cougarins, good question. There is a list that is on our website, or you can shoot me an email and I'll provide it to you in our brochure. There are certain coins that don't qualify. The Cougarin, for example. The Cougarin doesn't qualify because it's only 0.95% gold. It doesn't meet the purity level. So when you're buying a coin, it's always best to make sure that it meets the purity level. I can tell you that most dealers, who is one of the parties involved, the precious metal dealer, most dealers nowadays will have a section on their website of allowable coins, and they'll state a product on their website as either being IRA allowed or not. They'll be able to tell you if the coin meets the purity level. If you happen to do place an order of an unqualified coin, the depository that you're storing with, they do review every single coin or bar that comes in, and they will notify us if it doesn't meet the IRS regulations. So even if you mistakenly place an order, or if you order and the dealer ships something they weren't supposed to, we will catch that prior to storing it into your vault space and returning it, just so that you're not breaking any IRS code. Question came over, are coins worth the same as bars? Per the IRS, they are, and this brings up a good point. If you were to buy a 1-ounce American Eagle gold coin, it's 1 ounce of gold. It's worth its weight in 1 ounce of gold. If you were to buy a 1-ounce Pam Swiss bar, those two from a market value should have the same value for IRA purposes, because IRAs, as you remember, cannot hold collectibles. Therefore, the custodian will not report any collectible value built into it. So if you were to buy a rare coin that meets the purity level, but you pay above spot price for it because you believe there's some collectible value built into it, Entrust will not show it as that value on your statement. We will show it at its melt value of 1 ounce of gold. That comes into play with proof coins, for example. Proof coins, because they're a special type of coin minted by the U.S. Mint that comes with a certificate of authenticity, they do have a premium when you buy those coins. But when you store them in an IRA, they're going to be showed as if it were just a regular 1 ounce eagle or a 1 ounce bar. That proof value is not going to be shown from a market value because per IRS code, we cannot show any collectible value on this asset. You're basically buying 1 ounce of gold or silver. Just flipping through a few questions here. A question came over about confiscation. I won't spend too much time. This is a conversation you can probably have in its own webinar. In 1930, the U.S. government did confiscate or make it illegal for U.S. citizens to hold gold. It only applied to gold at the time. But the theory behind that, from everything we've researched, stated that at the time the U.S. dollar was on the gold standard. So in theory, what the government was trying to do was to protect the value of the dollar by making it illegal for U.S. citizens to hold gold. So obviously that's happened in the past, and there's concerns that it could happen again. I think it's safe, or something that should be noted is that we're no longer on the gold standard, so confiscating gold in theory would not have the same relevance as it did back then, but that doesn't mean that it won't happen. Obviously, if worst case scenario, the government felt that too many people were moving into physical metal as a way to hedge or to get out of the dollar, I guess in theory they could make the assumption of either confiscating or, more likely in my opinion, they probably would place a tax on gold or silver so that when the time came for you to sell it, you would have to pay a large tax, which would deter clients from investing in gold. But in theory, because we're talking about IRAs, these assets being held under direct IRA, under custodial control, and Entrust being a regulated institution, if the government were to come in and say that we're confiscating all of your IRA assets, in theory, they would have that ability. Now, would they ever do that? Doomsday, I can't say yes or no. So it would be no different than you buying an asset and storing it at a depository as opposed to under your bed. In theory, they would have access to it, I would think. I just don't know if that is something that would ever really play itself out. That looks like the end of the questions on the type of asset that can be held. So what we'll move on to now is the next section of our presentation, where we'll discuss the three parties that are involved when owning physical metal in an IRA. The three parties that come into play, obviously there's an IRA custodian or administrator, in this case Entrust, being the administrator of the IRA. Our role per the IRS code is to house the assets, facilitate any transactions on behalf of your IRA, meaning obviously it's a self-directed account, you're choosing the investments, but Entrust will oversee and facilitate those transactions for you, and then we will provide ongoing record keeping of the assets that the IRA owns from a fair market valuation standpoint, from a reporting standpoint to you as the IRA holder, and as a reporting to the IRS, which is required on an annual basis. So that is the role that Entrust plays when it comes to housing not just physical metals, but any type of non-traditional asset within your IRA. With physical metals, the question always comes up, clients seem to think that Entrust is the one they buy their metals through. That is not the case. Entrust does not sell or promote any product, physical metals, stocks, bonds, mutual funds, whatever it may be. We do not sell any product. We just simply house the assets and provide the required record keeping. So when it comes to buying physical precious metals, it will be your choice as the client to choose who you're buying those metals from. We'll talk about the different things to look for or to consider when it comes to choosing a dealer here in a minute, but you will need to choose a precious metal dealer from whom you are buying the assets through. Entrust has worked with almost every large precious metal dealer in the country. We have a very detailed process with each of these institutions. Most of them go by the same procedure. Some of them do have a few different procedures that we can facilitate when it comes to placing orders, but the process for placing an order is very easy. It's actually no different than you placing an order personally. The only difference is that when the time comes to fund, the invoice of what you agreed to buy would be submitted to Entrust for funding. But we'll get into that when we talk about the process of actually placing an order. So the second party involved, of course, is the dealer from whom you buy from. The third party that comes into play with most custodians, including our major competitors, is a depository. The reason that Entrust works with a depository is that we do not have the facilities to store these assets for safekeeping insurance purposes ourselves. At this time, we don't have our own depository or safekeeping vault, so we outsource, if you will, or work with other regulated bank-like institutions to provide that safety and security for us. We have 3 depositories that we work with regionally. We have one on the East Coast in Delaware, we have one in the Midwest in North Dakota, and one on the West Coast in Idaho. Those 3 facilities, it is up to the client as to which facility they store with. We'll talk about the fees for the different facilities here in a minute, but you will choose a depository to house and safekeep your assets. Each depository carries the same insurance policy of $1 billion per account, so you're more than sufficiently covered in case of any type of attack or anything along those lines. The assets are stored in a vault. They're segregated accounts, and they are insured. Entrust does work directly with these depositories on a daily basis, and that is one of the reasons why we have this Precious Metal Service Center. Every delivery that you make is reviewed by the depository, and we are provided details of the exact coin, the year of the coin, the mint, the serial number, things along those lines, so that we can properly compare what was shipped by the dealer to your safe based on what your invoice was. This way, if something was ordered and something else showed up at the depository, we are going to know about it. Or if a coin that's not allowed to be held in IRAs happens to make its way to your safe or depository, we will be made note of it and notify you. So working directly with the depository on a daily basis keeps us in the loop of every transaction in and out. But we'll get into that here in a minute. You can see that I highlighted the section that it has to be held under direct custodial control. What the IRS has come out with in a private letter ruling is that as long as the custodian is either directly housing the assets or housing them with an equally regulated or bank-like entity of itself, it can store with those institutions as well. So if we were to store with a Delaware depository, for example, who is a regulated trust company in the state of Delaware, they are regulated in the same fashion that we are as a custodian. Therefore, they can house those assets for us because they have the facilities and that's what they specialize in. Fees to consider. Now, each of these parties, obviously, when we're talking about physical metal, and the question just came over about the difference or the benefits of holding something like a physical coin over, say, an ETF, well, this is what you have to consider for yourself. When you buy an ETF, you're basically buying shares of a mutual fund, if you will. It's supposed to be backed by physical metal. In some cases, it's not. The GLD, for example, you can review the perspective of that ETF, and there's only a certain portion of the assets that are actually held in physical gold or silver. Some of it may be in gold mining stocks. Some of it may be in delivery firms that are related to gold products. So reading the perspective will give you an understanding of what mutual fund or ETF you're investing in, as opposed to buying a 100-ounce silver bar. You are buying a silver bar from Engelhard or JM or whoever it may be, and that's what your IRA owns. Now, of course, there's some benefits to holding a physical bar. If something did hit the fan, or if doomsday played out and clients needed the physical metal to take possession of the metal because maybe that's the currency we're now on, you would be able to take possession of your bar. If you own 15 shares of SLV or GLD, nobody's going to be delivering any metal to you. You don't own physical metal. You own shares of a mutual fund that is backed portionally by metal. So the difference there is that you actually own these coins or bars that when the time came, you could take possession of them. Of course, it would be a taxable distribution at that point, unless it were a Roth IRA, but you could take possession of these coins or bars. Now, obviously, the downside of holding a physical coin or bar is that you have more costs involved. You have a cost to the custodian. You have a cost to the depository for housing and storing and insuring that asset. And then, of course, when you place the order, there's going to be a commission involved with the dealer that you choose from. Dealers do have a very competitive commission structure, and that's why researching the different dealers and comparing prices is very important as well. To go over the fees, first of all, with Entrust, we try to keep our fees pretty straightforward. We used to have a smaller annual fee, but we had setup fees and transaction fees, but it just became too tedious for the client, and we kind of felt like we were nickel and diming. It just felt better to create an all-inclusive annual fee of $150 a year. We do not have any type of setup fees, and we do not have any transaction fees. Where that comes into play is if you were to place multiple orders throughout the year, or if you wanted to stagger your order over a couple-week period to hedge against any type of volatility, you wouldn't incur any additional fees. Your fee is a flat rate fee, regardless of the number of transactions you place throughout the year, and regardless of the value of those assets. The second fee to consider is the actual storage fee to store and safekeep those assets. The storage fee is going to range depending on the facility that you store with. Anywhere from $95 a year up to $160 a year is the average cost for storing and safekeeping these assets. So when you choose a depository, you'll obviously want to do your own due diligence. We can provide you with all the information we have from a regulatory standpoint, from insurance, meeting the requirements that we need it to fulfill, but also doing your own due diligence on the facility itself. But you will need to keep in mind that there's going to be two fees involved when you own physical metal. You're going to have your custodial fee to the custodian or an administrator, being Entrust in this case, and then actually the storage facility that is going to house the assets for you. Looking at some of the questions that are coming over regarding the parties involved. So if you have any questions regarding the three parties involved, we will get into more detail about the actual process here in a minute. So this is really more general questions about these three different parties and what roles they play is what we're looking at now. Question came over, if you already have an Entrust account and you've already paid fees for, say, a piece of real property, do these fees apply? The way the Entrust fee disclosures work out is that our fees are based on the asset classes that you house. For example, if you own a piece of real estate and then also have precious metals, they are separate fees. The real property will have its own fee based on the number of properties that you hold that we manage for you, and then you would have a second asset class of precious metals. So there would be a second fee of the $150 a year to provide the maintenance and record keeping on these precious metal assets. Part of that fee is our system, unlike some of our competitors, is that we have a link feed directly into your online statements that updates the value of specific coins on a nightly basis. When you log into your Entrust account, we don't lump it together and say that you own 15 ounces of gold. It will actually list the coin that you own, the type of coin, the market value of that coin, or the type of bar and the make of that bar. So you will have a detailed list of the actual coins or bars that you own with the updated market values at the close of each day. Question came up about difference between Roth and traditional. We'll touch on that in a minute about the different types of accounts. Question came over about the Perth Mint as a depository. The Perth Mint is in theory, is a depository. It's in Australia. It's the Perth Mint. When you buy Perth Mint certificates, you actually receive a certificate that's backed by physical gold. I did want to mention that this precious metal presentation is, we're going to discuss the domestic option of buying and storing domestically. Entrust does have an option of buying and storing internationally through a company called Gold Money. That in and of itself is a different process, so we'll touch on that in a future webinar. Currently, Entrust does not work with the Perth Mint, only because of regulatory purposes. The only international option we have at this time is through Gold Money. So if you were to buy and want to store at the Perth Mint and hold a Perth Mint certificate, you would not be able to do that through an Entrust account. You would only be able to buy from a U.S. dealer and have those metals stored domestically. And it goes back to that IRS code of being under direct custodial control. If you were to buy a Perth Mint certificate, in theory you own a certificate that's backed by silver or gold at the Perth Mint, but you don't have physical possession of those coins because the depositor or the custodian is not in direct control of it. And because it's an international institution that we're talking about, there are some additional hoops that we would have to go through to set up that relationship that we just have not gotten to yet. We are considering it, but at this time the only international option we have is through James Turk's company, which is Gold Money. A few more questions came over about the Gold Money option. We would need to talk about that on a different presentation only because it's a different process and we wouldn't want to confuse the two at this time. Let me see here. Offshore depositories, ETFs. Okay, so that's basically the questions about those different things, the three different parties involved. So once again, you have the custodian and administrator. The custodian is a regulated trust company with the state that it's chartered in. That custodian could then obviously work through companies like Entrust for the record keeping. And then there's a precious metal dealer that you buy through. Precious metal dealers will have their own fees that you'll need to consider when reviewing them and comparing dealers. Commissions will vary depending on the product that you're buying. Gold Eagles compared to Canadian Maple Leafs may have different markups at different dealers. The general consensus is that on silver, a good price for a bar that meets the fineness requirements and the NYMEX and COMEX, anywhere from 90 cents to $1.15 above spot on silver is about average that we see. On gold, it's about $60 to $70 above spot. So just make sure you do your due diligence on the different dealers and the prices that they're quoting you for the different products. Silver Eagles and Gold Eagles tend to have a higher commission just because they seem to be in higher demand. But once again, from an IRA standpoint, you're basically buying 1 ounce of gold or silver, and that's why I think we see a lot more clients buying in bulk, say 10-ounce bars or 100-ounce bars of silver. You're going to get a smaller commission from the dealer. You're still meeting your wish of diversifying into physical metal and out of the U.S. dollar, but you're saving yourself a few dollars in terms of commissions. Next, we'll go over the actual process, and we'll spend a few minutes kind of just going over the details of understanding everything from step 1 of opening an account to the final step of the delivery of the coins. So we're going to talk about the 5 steps involved. We break it up into 5 steps. The first step is obviously to contact Entrust to establish an account. And we'll talk about the different accounts that Entrust administers on the next slide, but you'll want to first open up your account with Entrust. Then your second step, of course, is to fund that account. We'll talk about the different ways of going about funding an IRA via rollover, transfer, contribution, whatever it may be. Once your account's set up and funded, you will want to then, at that point, if you already haven't, choose the dealer and depository that you're going to be working with. Most clients, when they come over, they know which dealer that they're going to work for. Sometimes they're referred by their dealer. So you usually will find out who your dealer is and then choose who you want to store with. Obviously, storing with it, the things to consider is maybe location. Is it closer to your home if you want to take physical possession from shipping cost standpoint, the fees that the depository is charging you for housing. But once you choose your dealer and depository and your account is set up and funded at Entrust, you're ready to place your order. We'll go over the process of placing an order with your dealer. And then, of course, once that order has been placed with your dealer, we'll talk about you submitting the proper documents to Entrust for funding. So step 1, opening an account, and this is where the question came up earlier about the different types of IRAs that can hold physical metal. Actually, any type of IRA, whether it's a traditional, a Roth, a simple, or a SEP IRA, can hold physical metal. I think a lot of times clients get confused because they refer to these in the media as self-directed IRAs. So they're always saying, well, I want to set up a self-directed IRA. Well, self-directed is more of a marketing term, meaning that you are the one choosing the investment. you still need to house it in one of the 4 types of IRAs that are allowed. A traditional IRA, by far the most popular, has an annual contribution limit of $5,000 a year. Unless you're over the age of 50, then you can put away $6,000 a year. But the reason that traditional IRAs are the most popular is that when you contribute to an employer plan for a number of years, and then you have what's referred to as a severing event, where you either terminate employment or retire, you can roll that 401k or previous employer plan into a traditional IRA without taxation. And actually, most financial planners or advisors would recommend that you do that. The reason being is that IRAs have a much wider scope of investment choices, everything from stocks to real estate to physical precious metals. Usually when you're in an employer plan, whether it's a private company or a state employer plan, you're usually limited in the number of investment choices that you have. It's usually a number of mutual funds or a different few stocks, whatever it may be. But once you have a triggering event where you leave that company, you're allowed to take those funds and roll them into a traditional IRA. And then that traditional IRA can be used to buy physical metals or other types of assets. Another common IRA that we see is the Roth IRA. It's become more popular over the last few years, without a doubt. I look at a Roth IRA as a glorified savings account. We can have our own webinar on Roth IRAs, without a doubt. What I like about Roth IRAs is that when you put the funds into the account, you do not receive a tax deduction. Same contribution limits apply as they would to a traditional IRA, $5,000 a year. Unless you're over the age of 50, then you can put away $6,000 a year. The funds going into the Roth, you do not receive a tax deduction on the next year's taxes, but the benefit is, as that plan grows, as the funds, so say you buy $5,000 worth of silver today, in 10 years it's worth $20,000. When you go to start withdrawing at the age of 59 and a half out of your Roth, you do not have to pay any taxes on the income. When you take a distribution from a traditional IRA, because you receive the tax deduction going in, you're going to have to declare the distribution as earned income for that year and pay income tax on it. So the benefit to a traditional is that you get a tax deduction going in, and depending on your tax bracket or your tax situation, you may need that tax break each year, and it may be beneficial for you to do it. If you don't need the tax deduction, contributing to a Roth IRA may make more sense because you don't get the write-off going in. It will grow tax-free within the IRA while it's in the IRA, but then when you take it out, it's a tax-free distribution. A common misconception that I hear about Roth IRAs is that, well, I don't want to put money into this account because I can't touch it till I'm 59 and a half. Yes and no. You can always take out your contributions. So if I were to put in $5,000 today and then in 2 years ran into some financial situation where I needed to take a distribution, I could always take that $5,000 back out of the Roth IRA because that was an initial contribution. It's only the profits and interest that you earn on that contribution that you cannot touch until you're 59 and a half. If you do take it out prior to 59 and a half, you will pay an early withdrawal penalty. So that's why I refer to it as a glorified savings account. You can put the money into it each year. You can grow it tax-free. If you need to dip into it, you can always take your contribution out because you've already paid taxes on it. So that's just something to keep in mind. But yes, a Roth and a traditional are eligible for holding physical metal. The next 2 plans that we have listed here are employer plans. A simple IRA really applies to small businesses anywhere from 2 to 10 employees at the most. It's it's an easier plan for the employer to implement. There's less costs involved than, say, a full-blown 401k plan. It still allows for employees to put away money for themselves up and beyond the maximum contribution of a traditional. So on a simple IRA, you can put away up to $15,500 as the employee for a tax write-off, and then the employer will usually match anywhere from 3 to 5%. Anywhere they can obviously match what they prefer, but that's usually what we see is anywhere from 3 to 5%. The employer comes in and matches that contribution up to that max. So it's similar to a 401k plan. Doesn't have the overhead of a plan administrator. The fees are less on a simple IRA, but it really only applies to smaller businesses. The SEP IRA is really a self-employed pension plan. It's actually a traditional IRA with a higher contribution limit for self-employed individuals. So if you are self-employed and you want to put away more money into your retirement than the allowed $5,000 or $6,000 traditional IRA max, you can set up a SEP IRA for yourself where you can actually put away up to $49,000 a year as a tax deduction for yourself. So being able to put away those funds as a tax write-off and to build your retirement, the SEP IRA, if you're self-employed, may be something for you to look into. The other two that I have listed here are not as common. They're fairly new compared to IRAs, health savings accounts and educational savings accounts. Both of those can actually hold physical metal within them. We don't see as many of these type of plans for a couple of reasons. One, the contribution limits are much smaller, so it may take you a while to build up funds within that account to actually go out and buy something other than mutual funds. But if you've been putting money into an HSA for the last 5, 10 years, whatever it may be, and you have a decent chunk of change sitting there that's just sitting in mutual funds or money market accounts, you certainly can invest those funds into physical metal. Physical metal may be the next best thing to mutual funds because it is easily liquidated if needed, but it's another way to diversify or to possibly grow that account's value. So once your account's set up, the next step, of course, is funding it. We'll refer to IRAs here. There's 3 ways to fund your IRA. You can transfer funds from an existing account. So say you have a brokerage account at a Schwab or a Fidelity. The thing about IRAs is that they're portable, meaning that you can transfer funds back and forth between your current IRA and a new Entrust IRA as often as you like without taxation or penalty. They're called the custodian-to-custodian transfer. They're very easy to do. Most of the large firms accept fax copies of forms nowadays, so usually within 2 to 3 business days you can move funds between your IRA accounts to diversify your portfolio. So don't think that you have to have one or the other. You can certainly have a brokerage account and then also hold physical metal through an Entrust account. Another way to fund your IRA, as we mentioned earlier, is to roll it over from a previous employer plan. It does need to be a previous employer plan because if you're still actively contributing to a plan, most employers, for administrative cost purposes, will require that you keep the funds with them so that they can do the reporting. They will tell you what type of investment options are available. But as long as you're still working for that firm and actively participating in the plan, you're more than likely going to have to leave that plan where it's at. There are some exceptions. If it's a smaller firm, say a group of doctors or a group of attorneys that have created their own plan, if the plan allows, you can do what is referred to as an interim rollover, where you can keep the plan active for future contributions, but you are allowed to move some of the funds over to an IRA to diversify the portfolio. But if you work for a larger firm or a company plan, chances are you're not going to be able to move those funds out to an IRA until you have a triggering event of either severance of employment, retirement, or something along those lines where you no longer work for the company. The third way of funding an account, of course, is your annual contribution. Each account has its own limits. Each plan is a little different. Definitely want to run those by your CPA or tax advisor or do some research on them to understand which plan may be beneficial for you and the contribution limits for each. But Entrust is also here to educate you on that. So if you have any questions, we certainly can tell you what the limits are or what may be best for you, but once again, for educational purposes only. That basically concludes the opening and funding of the account. I'm just going to flip through these questions to see if there's anything relevant to that. A good question came over about a Roth conversion. A Roth conversion is where you basically take a traditional IRA and you convert it to a Roth. Back in 2010, legislation was passed that allowed everybody to qualify for Roth conversions. Prior to that, it was limited to the amount of earned income you have, but nowadays anybody can convert a traditional to a Roth. What you'll want to consider in this case is that you're taking money out of a traditional, moving it to a Roth. You will have to declare whatever you convert as earned income in that calendar year. So the downside is you're taking a tax hit now, paying the taxes of moving it from a traditional into a Roth IRA. benefit being that now that it's in a Roth, if you invest in an asset that appreciates tenfold over the next 10 years, you're never going to have to pay earned income on those funds now that they've moved over to the Roth. So you're taking the tax hit now, you're putting it into a Roth, you're growing the Roth for future distributions without taxation. The question came up, do I have to wait 5 years? You are correct. One of the stipulations to a Roth IRA, besides waiting to your 59.5 to withdraw without penalty on the interest, you also have to wait 5 years from the time that account is established to take distributions, whether it's converted or contributions. So once you open up an account and fund it via contribution or a conversion, you have to wait 5 years before you can take those funds out. So in theory, if you're already 62 or 63 years old and you're thinking about doing a Roth conversion, you need to keep in mind that as soon as you convert it, your clock starts. You have a 5-year window before you can start withdrawing without penalty. So, I mean, if you're 55 or under, it's kind of a no-brainer because you can't take it out for 5 years anyway. But if you're already over the minimum required age for distributions, it's something you'll have to consider for that 5-year waiting period. So we've talked about setting up and funding the account. The next step, of course, is to place an order. Before you place an order, you'll want to choose your depository, as we've kind of talked about earlier. Choosing your dealer, things to consider, the type of products that they sell, the commissions they have on those different products, comparing them to make sure that they're competitive with the industry, that you're not paying more than you should from a commission standpoint. The other thing to keep in mind is some dealers will charge a shipping fee. Most dealers, when they place IRA orders, will include shipping in their commissions, but some firms that have smaller commissions do not cover shipping. So you'll have to weigh the two. In some cases, if you're buying $50,000 worth of silver and shipping it up to Delaware, it may be cheaper to go with a higher commission company that covers the shipping as opposed to a discount dealer who doesn't cover shipping. So weighing the numbers and comparing, at the end of the day to save yourself some funds, you're always welcome to call us. We can kind of share the difference between the larger firms that we work with. But the fees are usually nominal for shipping unless you're talking about a large amount of silver, which could have some weight to it. If you're just talking about gold or platinum, gold or platinum, the shipping costs are going to be fairly nominal because we're not talking about a huge amount of weight. Choosing depositories, as mentioned earlier, you'll want to compare the fees for the different facilities, the location of the facilities, the different types of storage options that they have. Some facilities will take photos of every coin or bar that comes in. Some just have videotape recordings that are needed in case needed for later. But also, performing your due diligence. Obviously, the companies that Entrust work with have gone through our stringent due diligence process. But at the end of the day, it's still your choice, and you always want to do your own due diligence on the different facilities that are available. Now that your account's set up and funded, placing an order, very easy, especially since Entrust has our same-day funding policy where we will fund the same day that you place an order. I will say that we would need that order prior to 1 o'clock Pacific Standard Time or 4 o'clock Eastern Standard Time in order to initiate the wire that same day. If we receive an order after 1 o'clock Pacific Standard, we will still input the wire, but it won't obviously be sent to the following business morning. Because we have this policy and we stick to it, and dealers realize for the last, since we've opened this facility that we've stuck to that, they will take your order right over the phone. Most large dealers that we work with, once your account's set up and funded, they will need to verify funds in the account before they lock in an order, and there's 2 ways you can go about doing that. You can either pull a statement online from your Entrust account and provide it to your dealer, or better yet, most dealers would just shoot us what we refer to as a verification email asking us if John Smith has X number of dollars available, and then we will reply to the dealer and CC you to state that you do have available funds, and they'll take your order right over the phone. So if you're worried about volatility, I know that some of our competitors may have a different funding procedure where some dealers will require that the funds are delivered to them before you place an order, and it could take anywhere from 5 to 8 business days for the funds to arrive. Well, in today's market, there's a lot of volatility that could happen within a day. So if you decide you're watching the market at 12 o'clock Eastern Standard Time, you want to move forward with placing an order, you can call your dealer, place an order right over the phone. They'll generate an invoice for what it is you agreed to purchase. They will provide that invoice to Entrust, along with what we refer to as our buy direction letter. That's our authorization, authorization signed by you, authorizing us to fund this. So after you place an order, you'll receive an invoice from the dealer. Usually the dealer sends that to Entrust as well. But then you will provide a buy direction letter authorizing that I do agree to the terms of this invoice. I do agree to buy X, Y, and Z coins for X number of dollars. You would sign that and submit that to Entrust. We would then initiate the wire that day for you. How our process works, after we initiate the wire, we will send a confirmation email to the dealer and CC the client. It will confirm that the wire has been sent and the dollar amount of that wire. It will also provide a packing slip with the delivery instructions to the depository that you have chosen. So if you've chosen to store with Delaware Depository, we will email the wire confirmation to your dealer, letting him know that the funds have been initiated via wire, and attach that packing slip to your vault space at Delaware Depository. Now, unlike some of our competitors, we take it a next step. When we place an order through your Entrust IRA, and you were to log into your Entrust IRA after you place that order, you're going to notice that the asset you own is the dealer's escrow account. So if you buy from a dealer and we send a wire for $50,000 to buy 20 American Eagles, whatever it may be, when you log in initially, you're going to see that there's a $50,000 asset called in the name of your dealer as a dealer escrow. It will remain that way until we receive confirmation from the depository of the coins being delivered. So once those 20 American Eagles arrive, we'll double check it against the invoice that you initially sent to us. If everything matches, we will go ahead and send a confirmation to you, letting you know these coins have been delivered, and we'll update your statement of selling that dealer escrow and buying the actual coins. This allows us to audit every transaction coming in. This allows us to make sure that the coins that you bought were delivered, and they were delivered in a timely manner. If you log into your account, now obviously we have systems in place where we send out reminders every 10 days, but in theory, say in 2 weeks you log in and it still shows the dealer escrow, well, that simply means that they have not delivered the coins yet, and it's time for us to follow up with that dealer to see where they are. So it allows us to track every delivery. It allows us to make sure that what you bought is being delivered, and it also keeps you in the loop as to when things are delivered to the depository. One last slide about the process. This question comes up a lot about selling metal or taking physical distribution. Both are allowed, of course. After you've placed the order and it's been delivered and it's been sitting there, say, for 3 years and it's appreciated, and the time comes for you to sell those back to a dealer, same process as the buy. You will choose the dealer who you're selling to. You'll work with the dealer. You'll place an order. They'll generate an invoice agreeing to buy X number of coins at X number of dollars. You'll provide that invoice to Entrust along with our sell direction letter, authorizing us to release those coins from your vault space to the dealer of choice. A couple things to consider. It may be beneficial for you to choose a dealer who also stores at the depository that you store at. This way it'll just be an internal transfer from your vault space to their vault space, and you won't have to pay any shipping costs. If you opt to sell to a dealer across the country, you would be responsible for the shipping costs to have those metals shipped back to the dealer. So it's just something to consider. Taking a distribution. It has happened quite a bit in the last couple of years. Either clients coming of age of 59.5 or have been of age and they're looking to take either an RMD, required minimum distribution, or just a general distribution. Instead of selling back and taking a cash distribution, they're having the coins or bars shipped to their home address, which is allowed. Just a couple things to consider in that case. You will be, if it's a traditional IRA, it is a taxable distribution. The amount of taxable distribution will be based on the fair market value on the day you request the distribution. So if you submit a request to ship 5 U.S. Eagles to your home address today, you would be taxed on that distribution at that point based on the fair market valuation or value of those coins on that specific day. The other thing to keep in mind is that there will be shipping costs unless you were to actually drive to the depository and pick your bars or coins up. We will ship them to you. We do provide different types of shipping options, so you can review the cost for each, whether it's United States Postal, FedEx, whatever it may be, but you will be responsible for those shipping costs to have them shipped from the depository to your home address. Okay, so that's kind of the process. I'm not seeing any questions pop up on the overall process, but if you have any, feel free to type them and we can get to it in the Q&A section. The next portion is talking about why Entrust. What's the difference between Entrust and any of our competitors? And as we've kind of stated, I think having the Precious Metal Service Center with dedicated staff here, our only job is to deal with precious metal clients. So we have a very good relationship with all of the dealers that we work with and, of course, all of the depositories we work with. So we're able to stay on top of any transaction. You have a dedicated staff that you can reach out to and ask them questions about your account or the process or where they are in the delivery. Having that, I think, is a competitive advantage. It also allows us to have a same-day funding policy, which puts us heads and shoulders above our competition, and dealers really prefer being able to lock in a price knowing that they're going to get funding within the same day. In today's volatile market, if you place an order and the dealer doesn't receive funding for 2 weeks or a week or whatever it may be, he's at risk of the volatile market as well, because you may end up canceling that order, and not that it wouldn't happen under the Entrust policy because of the same day, but in theory, that could put a custodian in a difficult position. Client calls up and says, I want to cancel that order. Well, what does the custodian do? Do they leave the dealer high and dry because metals have pulled back? So it's just an uncomfortable situation, and that's why most dealers will either work with a company that only provides same-day funding, or they're going to require that you fund before they take your order. So having that same-day funding policy provides us a huge competitive advantage. Being able to track and review all incoming deliveries, I know dealers and clients appreciate that. I know that some of our competitors do not do that. They rely on the client to track it themselves in terms of watching their statement. But we feel obligated as the custodian, and because we're not housing the assets in our own facility, we feel obligated to make sure that what you ordered is being delivered to the depository of your choice. Having online access that you can log into 24/7. As I mentioned, the values of your specific coin or bar are updated daily, which I think is a nice feature to be able to log in at any time and see the true value of your account. Not having any type of setup or transaction fees, I believe, also is a competitive advantage. Even though our annual fee may be a little bit higher than some of our competitors, the fact that we're not charging a $40 or $50 buy or sell transaction fee every time you place an order. So if you're looking to place orders over a couple-month period to hedge against volatility, you're not going to be nickeled and dimed on every transaction. I'm just taking a look at some of these questions real quick. A question came over about a distribution in kind. When you take a distribution, it will be taxable. You will receive a 1099-R for the value of the metals on the day you requested the distribution. If you have uninvested cash in the account, part of the distribution form is you can request that Entrust withhold and pay a portion of those taxes to the IRS for you. But if you own only gold coins and you want to take those gold coins out as a taxable distribution, we will send you a 1099-R. We will not withhold any taxes on it. We will not pay any taxes for you, but we will report it as a distribution, and you will need to settle up next April when you file your taxes. So you certainly can take a taxable distribution from an IRA. You are not required, unlike on a 401k, you are not required to withhold. You will just, it will be reported to you and to the IRS, and you will need to settle up next April. One last topic, because I know we're kind of running out of time here. I did want to talk about some of the benefits or reasons why people look to physical metal as an option, as a way to diversify or to protect wealth. Once again, this is strictly for educational purposes. What I'm about to go over, there's no sell pitch to it. There's no persuasion or selling of advice. It's basically looking at historical data and understanding why prices of gold or silver move the way that they do. So I think it's important to look historically as to why investors and even institutions and governments, for that matter, have looked to gold as a way to protect wealth and as a way to diversify. First, I will make it known, in my personal opinion, and based on, I'm sure, other people's opinion, I personally don't view gold as an investment. The reason for that, I don't believe it's meant to be an investment. It's always been viewed as a benchmark currency, if anything. So really, if gold's going up, it's not that your investment's going up. It means that the currency that you hold that investment in is being devalued. So when gold prices rise against the dollar, you can make the claim that it's not gold going up, it's the value of the dollar going down. And if you look at historical information, historical charts, that's exactly what you're going to find out. And we'll look at that here in a minute. Another reason why we see people or governments or institutions moving into gold is that when the cost of holding gold is low. Now, what we're talking about here is opportunity cost. If interest rates, in our case, at zero or in negative, if we're seeing inflation, if your option is to put your funds into a money market account as opposed to gold, if you look back, and we'll look at some charts here in a second, back in the 80s when interest rates were, 10% or whatever they may be, 9, 10, 11%, the interest you're earning on holding a cash position would have been that interest rate. So gold would have had to have at least matched that in terms of a performance. But in today's world, with interest rates being held by the Federal Reserve down to zero, or in some case real interest rates of negative, if you include inflation, there is no opportunity cost. So if you put your money into, say, a bank account, into a money market account, or if you decide to put it in gold, the opportunity cost there doesn't exist because you're not going to earn anything because the real interest rate are at zero or near zero, depending on where you're housing the cash. The third reason countries and institutions and investors have held gold in the past, it's often referred to as a crisis commodity or a flight to safety. When governments or regions are having difficulty from a geopolitical standpoint, we see investors, institutions, and governments flocking to gold as a safe haven. So those three reasons are a large part of why people look to gold as an option, not necessarily as an investment, but certainly as an asset class for diversification. The first one I want to talk about is that diversification, or talking about the devaluing of a currency. I think this chart kind of speaks for itself, and I don't know if many of you have seen this, but what we're looking at here is the money supply of the U.S. dollars in circulation. If you take a look at this chart, it's kind of shocking because from 1981 through almost, you could say, 2008, the increase in money supply, which is the dollars in circulation, varied from anywhere from 0 to 20% increase a year. Obviously, it was low at some points where it didn't increase at all. Sometimes it moved up 20%. But really from 1981 to 2008, it was a pretty steady increase of anywhere from 0 to 20%, depending on how things were in the economy. But as you can see, in 2009, the money supply in our country doubled within a year's period. And you can see that huge spike up. And then over the next few years, it continued with these quantitative easings that you hear, QE3 or QE1, QE2. You can see what that was is the federal government pumping money into the system to stimulate the economy. Well, if you compare this to a chart of gold or silver prices, they're very evenly correlated because what's happening is the value of your dollar is declining, therefore the value of gold against the dollar is going up. So you can see this huge spike between 2009 to 2011. Well, that's exactly when the prices of metal shot up. But then if you look, from 2011, middle of 2011 to now, the money supply has basically stayed still, which we all hear about in the news, talking about QE3, when's it coming, job reports are slumping the last few months. So I think that's what the markets are waiting for. The gold and silver markets are waiting to see if there's going to be additional money pumped into the system. Back in 2011, when money was just being printed left and right, you could see the price of gold and silver went parabolical, almost to the point where it was just ridiculous because everybody just assumed that the Federal Reserve was just going to keep printing money, devalue the dollar, but then all of a sudden they stopped doing that, and they haven't done it for about a year and a half. And you can see what's happened to the price of gold and silver in the last year and a half is it kind of came back to where it was back towards the end of 2009 when reality set in, okay, maybe they're not going to continue to print money. Well, if you look at the jobs reports and inflation numbers in the last couple of months, things from this stimulation, we had a nice little rebound, if you will, from our recession with this stimulus money. But in the last few months, it seems that things are getting sluggish again. And some would say it's because that quantitative easing money has kind of run its course, and now we're back to the point, okay, maybe we really aren't in that recovery. And you'll know when we're in a true recovery because there'll be creation of jobs. If you look at historically, no country has ever come out of a recession without creating jobs for its citizens. So until we're able to create jobs, I don't think it's safe to say that we're out of the, we're not clear yet. And I think that's what's seen the last couple of weeks or the last couple of months in the jobs report. So now the question is, come August meeting, is the Fed going to create a QE3, or are they just going to continue to do keeping rates low? So that's kind of why I think in the last year and a half, gold and silver have range traded. They haven't really done anything because they're waiting to see. It's not that the dollar's getting any better. It's not that it's getting devalued because there's no money being printed, but it's kind of a wait-and-see mode. The other thing to look at here is inflation. Obviously, over the years, inflation, gold has always been a hedge against inflation. When there's inflation in the 5 years since World War II, when this country's had its highest rate of inflation, the average rate of return for the Dow in those years was negative 13%, whereas the rate of return on gold was 135%. So I think it's safe to say that there is some type of correlation that when inflation increases, the price of metals increase because the price of costs of goods increase. But if you listen to the news or the government, according to what they're stating, the numbers that are being reported, is that we're not facing inflation at this point. Unfortunately, I can't necessarily agree with that because I'm pretty sure when we go to the grocery store, the food costs have gone up dramatically the last 3 years. When we go to the gas pump, energy costs are drastically up the last 3 years. Unfortunately, in today's numbers, food costs and energy costs are not considered to be part of these inflation numbers. So even though we're hearing there's no inflation, truth is I think it's safe to say that we are seeing some type of inflation, which, of course, long-term is bullish for gold. So those are some of the fundamental reasons of looking to hedge, to protect your investment, to protect what you've earned, your buying power, if you will. To protect your buying power is to get into physical metal when you think the value of your currency is going to be devalued. The second point that we talked about is when the cost of holding gold is low. And once again, we're talking about opportunity costs. And if you look at this chart, it talks about covers the real interest rate in this country over a 20-year period. And you can see when there were gold bull markets is when interest rates were low or in some case negative. When you would see a negative interest rate is when you take the real interest rate and you subtract out the rate of inflation. So if the interest rates are paying 5%, but inflation 7%, in theory your real interest rate of sitting in cash is negative 2%. You're losing buying power by sitting in cash. That's when people are looking to invest in gold because gold usually increases as the value of a currency goes down. So when interest rates are low or in some cases negative, as we are in the current situation of a negative interest rate, you're seeing a gold market. So basically what we're stating here is that the opportunity cost of holding gold is very low at this point because the Federal Reserve is keeping interest rates low, and they've already said they're going to do it through the end of 2015. So I think it's safe to say that gold could be a decent hedge, a way of protecting wealth, until you start seeing interest rates going back up. If interest rates go back up 5, 6, 7%, then you have to consider, is it better for me to be in a money market earning 6, 7%, or should I still be in gold? Is it going to outperform that 6 or 7%? But when there's a negative interest rate of sitting in cash, it points to an opportunity to hold an asset like gold because your options are very limited. So that kind of concludes today's presentation. I know we're about 10 minutes over. Just to recap, what we kind of went over today is the IRS guidelines of what coins and bars can be held. Once again, the IRS specifically states what's not allowed, and then they have exceptions to their own rules, and that's what we can rely on for the types of coins and bars that can be held in an IRA. When you're talking about physical metal as opposed to an ETF, you're talking about 3 parties. You're talking about the custodian and record keeper, you're talking about the dealer from whom you're buying from, and then the depository for safekeeping. You'll want to do your due diligence in all 3, and obviously, comparing fees, comparing processes. It's very important to understand who those 3 parties are and what role they play. The 5 steps of opening an account, setting up an account, funding it, placing your order, funding and delivery. All those options you can find on our website, but you're always welcome to call us, and we're happy to walk you through those processes as well. And then we kind of touched on some of the benefits or potential benefits of holding physical gold, what they do, what it means to diversify with physical metal, and protecting wealth and your buying power of a certain currency. What I'm going to do is just take a quick look to see if we have any final questions coming over. A question came over about depositories being in South or Central U.S. At this point in time, we only have the 3. We're always looking for more depositories for regional. You'll notice that most of our competitors have 1, maybe 2 depositories, so it's not an easy process to get a depository approved because there are strict regulations as to what we need to do. Right now, those are the 3 we have. But you're always welcome to call us and share any possible depositories that you know of, and we'd be happy to look into it. That seems to be all the questions, so we certainly appreciate everybody attending. As you can see on the slide, the next steps, you're always welcome to call us with any questions. View our website for upcoming presentations. We may have future presentations on different types of topics within the precious metal world, so keep an eye on our website or call us with any questions. A question came over about our Northern Nevada office. It is a precious metal service center, but you're always welcome if you're local to visit. Just call us to make an appointment. Usually the mornings up until about 2 o'clock Pacific Standard Time are our busy times handling transactions. But in the afternoons, we're always here. So if you have a group or individually want to come and speak to us, you're quite welcome to. All right, well, I appreciate everybody attending. Hopefully you'll learn something new today. Like I said, if you have any questions, don't hesitate to give us a call. We've put our information up on the screen, but of course you can always view it on our website. Everybody have a great day, and we'll be in touch.
Thank you. Please stand by.